Welcome to Preserving Your Wealth with Mike McCormick, where we talk about smart ways to invest and preserve your money. Mike is a registered investment advisor with McCormick Financial Advisors in Bozeman, Montana. As an independent fiduciary, Mike does not receive commissions from any of the products or investments mentioned on this program. Consult a professional before making any investment decision. You can find old shows archived at McCormickFinancialadvisors.com. Learn, participate, interact.
All right, and the aforementioned Mike McCormick is in the house. How you doing, man?
Hey, Happy New Year. Happy New Year, everybody.
Yeah, there you are.
2020.
Yeah.
Oh, it's going to take me about 6 months to get used to writing that, I think.
I know, yeah.
Uh-huh.
There you go, Tom.
Happy New Year, Shane.
Hey, welcome in the house, Biggie.
I am in, yeah. In terms of where we are, where we've been, I feel pretty good. I don't know. Just stay away from mirrors. And keep a full ibuprofen bottle, and the future's rosy, right?
Yeah, that's it.
That's the key to happiness in this coming year.
For sure, yeah.
Well, that trade agreements.
Yeah.
That and trade agreements.
Yeah.
That's going to be the big story of the year. And my forecast, we can make some forecasts, I suppose.
Yeah.
There's no consequence to it, right?
Yeah.
You heard my disclaimer. You can't nothing.
Who cares? Yeah.
Right?
We don't have to be right.
I think that the Chinese forecast is going to be the Chinese trade agreement is going to be elusive and not definitive this year. And I think that our reversion of the NAFTA will be, which is already pretty much happening, I suppose. So
yeah. So
that's an easy one. But I still don't see China playing ball the way that Trump wants them to. I see a communist country that is playing long ball, longer than one more term in office, and I see them as having the ability to starve their citizens for generations if that means that's what's needed to do for the win. Yeah. So I'm skeptical about this January 15th. I just heard a report coming in on Bloomberg where allegedly, right? I'm not getting news to Mike. The allegedly is that the Chinese don't even have a Chinese written up version of whatever it is they're supposed to sign. They publicly haven't acknowledged anything about a trade phase one agreement. So we'll see what's news and we'll see what's not as we come along. But the market will, I think, become desensitized to it as it does with many things. Brexit, for example. Brexit still is a disaster happening, I suppose, in slow motion over there, depending on your view of things. I don't see it's going to be a benefit to England to leave the club, especially where they're sitting right now. And so the Chinese agreement thing, I think that we'll end up getting desensitized to that, focusing more on our own election and probably caring less with what the substance of it is. They're going to consume soybeans. They're going to buy wheat. They're going to have an insatiable appetite for it. And they'll find places in markets to buy it. But eventually, so let's say they buy all of Brazil's wheat. Well, the wheat that Brazil was selling to other people is now going to be bought from the U.S. So, it'll be okay in some regard. That's my sort of, it'll be okay review. But we haven't talked about forecasts for this year.
No, not yet.
And we can get into that, I suppose.
Sure.
We don't have to.
Yeah.
I don't need to rush things this morning.
Well, I don't think anything's going to happen in the first quarter. Because between now
Are you talking about trade deals or are you talking about anything?
I'm talking about anything. I'm talking about the economy in general.
Whoa, boy.
It's going to stay okay, but at the end of March, we'll have Super Tuesday will be done, and that's when the fair will start. So April on, I look for a downturn in the market because of whoever rises to the
fear
forefront.
Machine.
They're not going to have a brokered convention. That ain't going to happen. So
yeah, it is.
No, it isn't.
Yeah, it is.
No, it isn't. I'm sorry, it's not.
I don't know what you mean by a brokered convention.
Well,
I'm new
a brokered
here.
convention means that nobody will have enough delegates to win on the first ballot.
Oh, gotcha.
So then once the first ballot's done, then it's up for everybody. It doesn't matter how many delegates they have.
It releases all the delegates.
Yeah, it releases all the delegates. They can vote for whoever they want to. So,
or anyone can stand up.
Yeah. But if anybody does a Super Tuesday cull,
Wait! You can't get off that easily. If you're so adamant, it won't be an open or brokered convention.
Yeah.
Who's going to win then?
Well, I don't know who's going to win, but I know somebody's going to go.
Come on, you can't dodge the question.
All right, my bet.
Top three.
You can use my disclaimer too, Tom, if you want.
Yeah, my bet would be Buttigieg.
You're so funny. It's just great. I love it. I'm so glad we're being recorded.
Yeah, me too. I am too.
He won't even make it. He won't even make it to the VP stand.
I don't know. I don't know, man. I think you're overestimating the youth of this country and the American people and John Kennedy and.
Oh please, Hillary and BB, Hillary and Bloomberg's billions. There you go.
No, I don't think so. Yeah.
Yeah, they're broke. They have no money. The Democrats. Do you see Bernie though? He's yanking it, baby. He's raised almost $90 million. Spent most of it, of course.
And Buttigieg led the way in money for the last quarter. Thank you very much.
Yeah, but neither of them get the nomination.
Well, we'll see, won't we?
Oh, come on, serious.
I like the way you stay confident, Tom.
I'm a confident
under this
guy.
beratement here.
Yeah.
Hey, I've lived.
He was right. He was confident right up to election day.
Who's currently leading in the polls right now, Shane? Who's currently got the?
Well,
Trump.
Sure, understood. We're not talking about that side. We're talking about the other side. Right?
Biden's still the.
But neither of you guys think that he's going to be the nominee.
No, I don't think so.
Right.
We're talking about the demolition party, okay?
All right. Yeah, I agree. It hasn't made a lot of sense recently.
Yeah.
So
my second choice would be Klobuchar.
Just because it's hard to pronounce, that's you're into the people that it's hard to pronounce.
And Klobuchar, yeah, we can't have either one. That'd be my second choice. Yeah. They're not going to vote for Biden. They're not going to vote for Bernie. So what do you got left? You got the younger, you got the woman, and you got the younger
Hillary and Bloomberg.
Please,
what a magic duo! Just think about it.
No, I won't. I won't think about it.
So great! I love it.
Yeah.
So anyway, I'm only doing this just to get on you.
I know
that.
I know you are, and that's good radio. So get on me, man.
So Mikey, come on, give us three predictions. 3 people you think could win the Democratic. Come on, Mikey.
It's the Democrat.
So
it's the Democrat.
let me
There's nothing Democratic about it.
I am so good at not paying attention to this. I'm not sure I could name 3 candidates.
Really?
I mean, yeah, It's embarrassing how I turn the page. It's noise. I believe Trump's going to win, so I don't put any of my time into this. The Bernie Sanders is too old. I just can't imagine. And what's weird is he resonates with some of the most liberal people out there. It's remarkable he's been able to raise so much money because sometimes the people that want the redistribution of wealth are the ones that are looking to get it redistributed, so they don't have all that to donate.
Yeah.
And if you look at Biden, that's like milk toast with the vanilla seasoning taken away. I mean, it's hard to get excited about anything there. I wasn't aware Hillary was in the race.
Yeah.
But apparently she might make a cameo. These 2 people that Tom's got that are difficult to pronounce, charismatic, young. Yeah. I think I'm in Tom's camp. I got to tell you, this is again with no knowledge really about what's going on.
Oh wow! Okay.
So yeah,
Tom, I'm
statistically, I've got a better rate of being right than the people that know more. Right?
Okay. All right. What do you got, Jane?
Pelosi.
What about her?
She's gonna get up at the convention and say, "Pick me."
No, not a chance. Too old. If we're not going to elect old white guys, we're not going to elect an old white woman.
Got to be a woman. I'm telling you, the only way the Democrats
Klobuchar, or Tulsi Gabbard.
Tulsi Gabbard. Oh, that would be great. Oh my gosh.
Yeah, if I had to look at a Democrat for 4 years, Tulsi would be the one I want to look at.
Yeah, my voice would go soft on that.
She was surfing. Did you see her surfing in her surfing outfit, man?
Oh my goodness.
I'm not participating in this.
She's she's hot, man.
Okay, let's get to the importance of Mikey being here. Come on, let's talk currencies. What do you think? You're seeing some strong changes this last 10 days.
Yeah, I would even defer to you on currencies too, Shane. I am focused on the individual person out here, and the individual investors not playing currencies, and they're not investing in dollar-denominated international funds, and they're not too concerned.
They're not in the IMF.
Like, how many yuan will my $20 bill get me today? But I don't discount what you know, Shane, which is that it does move the big money dollars.
Yeah.
One theme that I keep hearing on these year-end stories, and now we're in decade-end stories, right? I mean, this has been a spectacular decade.
It has, yeah.
For making money passively in the stock market. It's been tremendous.
4,000% on Netflix.
Right. And it's all been in Jack Bogle's lap. It's all been in Vanguard passive funds. It's been in buy and hold. It's been go long on it and forget about it. Of course, it's been technology. That's the revolution that we're in. But the stories keep coming out about how hedge funds, these fancy bigwigs that we always envision have the inside news, the people that are doing the long short funds, the absolute return funds, the alternative strategies, the PhDs and quants, they are getting their butts kicked. They are so far off of the mark of the S&P, much less trying to make gains on it, that it is a testament to their marketing strategy that they still have clients. And really, they're alive. This is my notion. They're alive because these big investors, whether they're super ultra wealthy or whether they're sovereign funds or whether they're pensions, they're making so much money in the Vanguard style that they need to reallocate. They always say, sell your winners, buy your losers. So for the past 10 years, they've been selling Netflix and Apple and going and investing in these opaque sort of investment strategies that make big fees for the hedge funds, but haven't returned them a stinking dime hardly. So just if you're the average person, again, that's who I like to try and talk to out there, and you're feeling grumpy that maybe this boom has left you back to where you are or haven't participated and so on. Well, know that if you're a bigwig fat cat in Wall Street, you're probably not much further along either, and you're probably looking at some job cuts for your New Year gift out there. I have friends, colleagues that still believe, but they won't show me the numbers that turn the head. So going forward, what's going to happen? I think all things revert to the mean. I mean, nothing goes in perpetuity. Right now, we're having valuations that are too high. Things are expensive. Real estate won't always be super expensive. There'll be a reversion. But the prediction that I have this year is that despite everybody wanting to have it really be volatile, I think it's going to be milquetoast. I think that there's just and that's just boring, right? I think we understand the trajectory we're on. U.S. is strong. We've got.
I disagree. I have a total name for this decade.
Oh, you do?
The Roaring 20s,
the
baby.
Roaring 20s. The Roaring 20s. We have a population growth that hasn't been this low in the U.S. since 1918.
I know, it's incredible, isn't it? Demographics, baby. That's the whole thing of the 21st century. You got to pay attention.
Yep. You cannot just lower your interest rates and make money easy when you don't have growth. And growth comes from more mouths. It comes from more bodies, more people making stuff, more people thinking, more people innovating. Yeah. Japan is not the growth story that we want to be, and that's the population dynamic that we're going towards. So that is where I think that we're going to be offsetting our position of dominance. If things are going well, we're in a good spot. We've got a bright future. I don't see big changes happening for things, but we can only go so far. We don't have the fuel to get going beyond this. We might. My fear is that we try and do things to try and artificially create this fuel. Things like lowering the rates, or big fiscal stimulus, or more tax breaks. Things that will borrow from the future to stimulate growth now. I think that there's going to be a limit to that in this decade of coming to the reality that, we're kind of like Europe. France, as much as we like to make fun of it, they have long summer holidays. They have really good cheese.
And wine.
And wine and beautiful women. And, it's kind of an enviable lifestyle if you look at it in that regard.
There you are.
And we're kind of on our way there. That's my gist.
Okay. We got to take a quick break here. From our text line, 478-8298. Wow. No wonder they don't give you the job the way you talk about women. So I don't know what I said about women.
No, they're talking about me. They're talking about me.
Oh, okay. Well, that may be. All right. Well,
I'm offended.
I'm offended too. So as long as it's Shane, we'll be right back. 22 minutes after the hour, Thursday, January 2nd, 2020. Mike McCormick, half man, half investor. is in the house. Shane Tobin on the line in Cantaloops. And Tom Eagle, your morning mayor. And this is the KMMS Morning Soapbox, if you're just joining us. And we're talking a little bit about the future. Well,
let's go to the past.
Okay, let's go to the past.
Well, one thing I wanted to do is, we have to review year in review how investments did. And I look at things in sectors. I'm not an individual stock picker. The statistics are too poor for that. But I do believe that there's intelligent design in terms of what sector of the economy that is going to do well, where to invest your money. And if you look at the whole economy, you can divide things up from big companies to small companies. Well, that's how Morningstar did it, and it hasn't shown to be very effective in my view. When you look at the style boxes that they like to show you, there's not a whole lot of differentiation really between the small and large and the value and the growth. I mean, yes, large growth has outperformed, but you did just fine anywhere. But you really see differences when you break things out in terms of the sectors, the types of businesses that they do. Technology, no doubt, that is the leader out there. So year to date for 2019, the returns 50% for investing in the Vanguard or Spider or First Trust or whatever exchange-traded fund. Schwab's got one too, that would just allocate your money amongst the largest technology companies all the way down to some of the smaller ones with smaller bits. 50% for doing nothing. This is not normal. This will not happen. This might not happen again in my lifetime in terms of a one-year return on the backs of a decade like this to finish it up. Next in line, huge drop down to 33% return. That's communication services. This would basically be a splinter group of the technology sectors, the Facebooks and things that are providing connectivity. Financials at 32%. That's a heck of a win that we didn't really talk much about this last year. The financials were doing well. They came on strong in the second half of the year once the rate situation looked a bit firmer. S&P on average, 31%. And so what that means is that the S&P 500 on average, if you just got the 500 most commonly held U.S. companies, you're about 30% up. Now there's a fee that's associated with that. And so when you look at your returns, if you're in the high 20s and you have some diversification, that means, yeah, you're right in there. Industrials, 30%. Consumer discretionary, 28%. We end up in the 28% a bit with consumer staples, real estate. That's pretty interesting. Consumer staples are a defensive play, and you're right up there in the 28% returns. We drop down to 25% with utilities, materials, 24%, healthcare, 21% gain, and energy at the bottom, back of the bus, still with 11% gain. We saw oil go from $45 to $60, $61.74 is what the print was here. So we had a situation where everything was up, and the only thing that I can find that would have lost people money on my little cheat sheet right here last year is natural gas. As if you were into natural gas, you had lumps on your head.
You had a bad year.
Which the studies show is that we don't mind having bad years so long as everybody else around us has worse years.
Yeah.
Well, if you had 11% return, some years you might be feeling pretty clever. This year you're feeling left out. Now going forward, we're not going to have a return like this. We're not. Does it mean that you should go to cash? I think that right now, it's not a bad time to be hoarding a little bit. It's not a bad time to be waiting for a little something to change. But boy, really the chances are most people, if you look at, big, people around you making money, their money machine is really strong and they're still buying stuff. They have to. You can't put it all in cash. You can't put it all. You got to put some in real estate. You got to buy. You got to go ahead and hold your nose and add to that portfolio. There's an upward pressure on all these things that's still going to be around for a while.
All right. From our text line, 478-8298. Good morning, gentlemen. I'd like your sage advice on the 5G phenomenon. I've retained 3 financial planners, and without exception, they're recommending I invest a good portion of our rather substantial, it's 7 figures portfolio, in 5G technology. They suggest I invest in companies that manufacture parts that support 5G technology, like semiconductors, to companies that will most benefit from 5G. Also, they say investors should be on the support services necessary to maintain the 5G network. In short, my advisors act like the right 5G stocks are incredibly lucrative business opportunity. What do you say, Big Kahuna Mike and Shane? Thanks for the sound advice you always give. And Mike, what are your preferences on sectors going forward? Financial, technology, EFTs, and dividend-paying value stocks. That's a show in its own. Right?
It is. Well-written question.
So
sophisticated listener, even.
Well, I know Shane's talked a lot about 5G in the past. Certainly, Shane, what do you think? 5G. Where do you go there? Would you say?
Okay, two things. Make sure that your financial advisor is keeping track monthly of the 5G build out. The U.S. is going to require about 650,000 postings for it to work. T-Mobile is already advertising it. So that's the first thing. If they are expanding it at the rate that they claim they would, yes, it's a good consideration. Number two, streaming. Whoever you think is going to stream the best, my call is Disney, best streaming stock out there. Do not be in cables, do not be in networks, do not be in any other kind of television entertainment. You only want to buy entertainment that has a library or, has something that they can rent or sell, like Disney with the 20th Century Fox and their Disney library. Number three, it's very difficult to make a determination of which companies to go in on the hardware side unless you have a clear understanding of what hardware they're buying. The best hardware with regard to 5G is actually coming out of South Korea, not China, as everyone's talking about. But the squander there is that if China does go towards 5G, which they claim they're going to, watch this thing accelerate. So there's my advice.
All right. We'll get Mike's take on that when we come back. And
Apple, Verizon, AT&T, meat and potatoes. They've got the cash to acquire anything that's productive and profitable. Don't get fancy.
All right, we'll be back right after these important words. Stay tuned. 25 minutes for the top of the hour. Mike McCormick Financial Advisors in the house. Tom Eagle off your morning mayor. Shane Matabin, half man, half amazing in he's not in Vancouver. He's in Kamloops. And tomorrow's his birthday, so I have to wish him a happy birthday tomorrow.
We will.
Yeah.
Happy birthday tomorrow, Shane.
Yeah.
Michael, I very much appreciate it. And Tom, you're just pushing too hard. Okay, come on. You don't have to say that.
Okay. Let's take a phone call then. 522-TALK is the number. Caller, you're on with Mike McCormick. What's up?
Well, here's another issue of 5G before you rush to judgment. Now, I think the people are losing their bearings of being conservative. Now, why rush into new stuff? It's only a theory. As Shane said, it wasn't microwaves, but I looked it up, and there are microwaves. We could be fried like wieners with a little tower every few blocks. Now, and another thing is the investor. Are you sure there isn't a hidden agenda or people being blinded by money? If you invest your money in 5G, the three people that telling you to invest are going to get a percentage. So I think a conservative would look before he leaps.
Well, that's a good question. So, Michael, do you think that 5G has a physical damage potential to it that would affect the valuation, like Daniel's asking? And should we be concerned about something like that they may not have done enough studying and we won't know for another 10 years?
Hey, we're all going to die of cancer from all these airwaves, including our own, right? KG, the KMMS airwaves going through.
That's right.
Well, remember the brain cancer scare they threw on us in the 80s about cell phones?
Mm-hmm. Yeah. I mean, we don't know what causes it, but we also know that we're addicted to this communication, and wires are not the way it's going to go. So we're gonna play it till its end. That's a logical conclusion, you might say.
I was going to say it's pretty much a done deal. It's going to happen. Whether, there's all kinds of things that we've invented that have found to be a danger to us.
Well, and here's how I look at it too: is that the brand name they're calling is 5G, right? They call things, and the gist of what we're asking for is better connectivity.
Yeah.
Better reliability,
generation, right.
and more services, and that's what the market's going to ask for, and that's what we're going to get. And so, where is it going to come from? To the text caller's well thought out question is how to benefit from that.
Yeah.
We're in a situation where going public for a small company, it doesn't look as attractive, and their ability to stay private looks more attractive. There's tons of money available for them to stay private. And so if there's a company out there that's not already public, that's developing a great technology that'll help our 5G push or whatever it is, the opportunity for individual investors to get in is small.
Yeah.
And I hate to date myself, but Mike's absolutely right. You remember, Tom, because Mikey was probably just being born or in grade school, but fiber optics back in the 80s, remember?
Oh, yeah.
And they spent billions, hundreds of billions of dollars to connect continents, and they sold the banks on, if we build it, they will come, and they built it and no one used it. Remember that?
Well, that's where Montana Power went south. They went with fiber optics, and that was the wrong...
Careful, that's
technology.
a trigger word for a lot of our listeners there.
Well, it is, yeah. Well,
it's a lesson not to be forgotten.
Savings.
No kidding. So again, for the great text question out there, how to play this. Unfortunately, I think that it is a boring answer from me, which is the big boys. I mean, Apple's hitting new highs today. They've got so much cash out there. Their role is to keep us connected with an Apple device in our pocket, ear, whatever, home, whatever it is. If there's a new technology that's going to happen, they're going to let it be proven. They're going to take it over and improve it. If there's a new technology that's going to be distributed out here, if you're not on the Verizon network, you're not getting good connectivity.
Yeah. Or if you're, Jeff Bezos, he's not going to stand by.
He's not going to stand.
This.
Exactly. Right.
And look at the deal that your president Trump's made with Apple. Did you see Weiwa's Christmas message to their employees a week ago? Oh, boy, we'll try and survive in 2020, because Trump has banned them in Europe and definitely in the U.S., right?
Right. Yeah. So careful picking these, the unicorn picker. And if you look at the IPOs that happened this year for the unicorns, you didn't want it in on any of them, really. I mean, for the risk you're taking, there's no value. So the other part of the question is, what sectors are we going to be looking at for this coming year? Boy, that is a great question. And my view has been consistent in the decade plus I've been in this business, is that there's three strong areas of growth for our country that make a pretty good diversified portfolio. One is technology. The growth will continue, not in a straight line. Part two, healthcare. With this low population rate, our business is going to be taking care of our old people, and they're going to spend all their money on staying alive and having a quality of life. Does that mean it's traditional healthcare stocks going forward? Depends who's in the White House and what happens with the Affordable Care Act, but something around healthcare, growing old, is going to be big business. And then the last buffer to it is this is a risky play that I don't expect to play out this coming year, but emerging markets is where the growth is. That is where the population growth is. That's where people are, driving their first car, buying their first condo. They still have a cousin that plows in bare feet with an ox. We're not having that type of growth here. That's my short little spiel on that.
Okay. Let's take our only break this session, Shane. Okay.
It's a challenge, isn't it, Mayor? Wow.
It's a challenge.
Somebody's got to be in charge.
That's right. We're back in 90 seconds. 16 minutes for the top of the hour. We've had a caller patiently waiting, talking with Shane. Let's go to the phones. Caller, you are on the Morning Soapbox with Tom and Shane. And Mike McCormick, what's up?
No kidding, Tom. One of my Christmas presents was a tinfoil hat.
All right.
Ooh.
So
hard to get those sizes to fit right.
Yeah.
Yeah, it did fit. It fit well, too.
Oh, good.
Yeah.
One of the stories about 5G is that it was a former military crowd control weapon that they would bring in, and it would overheat people in a crowd, and they would disperse crowds with it. So it has the potential to be misused.
Okay.
Hello?
Yeah, no, you're still there. Yeah. Sorry, the other line went away.
So now we have K-pop music to do that without having to get too fancy.
Yeah.
The other word that's going around is that Verizon is already paying hush money in cases of brain cancer where cell phone use is implicated.
Really? You believe that, Vinny? Vinny, you really believe that?
I do.
Do you really?
I do. I do believe that Verizon has known about the dangers of cell phone use. As I speak to you on a cell phone.
I just
Yes.
So AT&T and Sprint are letting Verizon carry the load, huh?
Well, I don't know about the others, but I only know about just Verizon.
Okay.
I mean, that's just what I've heard.
All right, man. Thanks for the call.
Tinfoil perspective.
All right. Good for you. I like it. Take care, man. Let's see. For Mike, should I, from our text line, 478-8298, Mike, should I buy index fund or managed fund with fees?
I mean, that's a leading question. I like the softballs. If you've listened to me, you know I'm a fan of the index fund. The active funds that are doing well, they're just matching the index. Anything from American funds is pretty much an index fund with a little bit of dressing on it. So I'm not opposed to something like that. I think that when you pay for active management, sometimes there's nice things you get, service, brochures, education. They can also place small amounts of money really efficiently that might not be otherwise. So it's not an absolute one, but watch out for these esoteric funds. They just haven't done things. There's 17,000 mutual funds out there. There's a couple hundred that go under every single year. If you haven't seen the name, careful. You can look up past returns compared to the S&P. That's an easy shopping point. But gosh, it's really hard not to say that you shouldn't just be passively putting your money at work right now. There's going to be bumps in this road. And if it takes you to have a fancy marketing brochure and a good service advisor that's going to help keep you in the seat, that is worth the money, without a doubt. The worst case scenario is that you go into an index fund and you're going alone and you're going through E-Trade and you're buying these things and you're dot plotting and heat mapping, and then the downturn happens and you do something rash. That's the biggest destroyer of individual wealth out there. The big picture, if you choose an active or passive, probably isn't going to change your net worth by a decimal point, but the other one certainly will.
Yeah.
Brilliant advice. Mikey has always warned you about it. EFTs and funds, index funds, all of these. Remember, they've replaced the word commission with the word fee.
Yeah.
Back in my day, we paid or charged commissions. It wasn't even long ago, late 80s, that Merrill Lynch was paying people $50 just to buy or sell a stock, And now you can go to Charles Schwab and not pay any commissions. So remember, like Mike has warned you, if you're going to do anything, check the fees, the cost of fees, because your in and out expense of anything is an immediate effect on your profits and equity.
Okay. From our text line, 478-8298, since USMCA is essentially identical to NAFTA, which it isn't, does Mike see it changing markets? So when they finally get this thing signed between our three countries?
Again, I think that the story for the year is going to be that we get weary of these agreements. And very few people are going to be looking at the details of it and how it impacts markets. And that's where you and Shane do a great job of dissecting these things for people. But it's complicated stuff. I'm not sure how I'm personally affected by a NAFTA or a USMCA trade agreement. I'm not personally aware of how I'm affected by a Chinese trade agreement. Personally, if I'm just living my life with my head down, I think that's the way that most U.S. people are going to go today. There's going to be times where the market swoons or breaks, and there's going to be, it happened because of a break in trade negotiation, or it's going to be because, maybe that's true. I don't see that these headline, unfortunately, because it's, you like to think that things are efficient and that markets go up because good news is happening. I think we've got a small disconnect about that, and I think we're going to get weary from these news sources. I think to some degree the president understands which news we'd like to hear and don't, and things that tick off the Democrats and let him spin out, and then he can go get back to work. So I don't think that these trade deals are going to have a whole lot to do with how our personal net worths do. And I know that might sound very naive, but I think the reality is you look at these news stories and they have a life to them. And we're kind of waiting for the election news stories to kick up, and we've got some old ones that are sort of simmering along. Yes, there's real implications of all this stuff, but we can't afford not to have a good trade agreement with North and South. I think that everybody recognizes that one.
Well, I think Shane can allude to the differences where Canada's concerned, obviously.
Well, yeah, we've talked about it, but again, brilliant analysis by Mike. And the reality of what the president is doing is he understands his news cycle. And he's annoyed by the effect that the news cycle has on the market based upon his trade relations and his negotiations. That's why I think that this whole conscript of two phases is made up. He's trying to get a hold of the valuation of the market not being impacted by it. If it's working and it's not, he wants to keep charging China tariffs. He should. It's worth billions of dollars to your country. He's got more to come. He's going to do the World Trade Organization over. He's going to do the European trade. I've told you. You think China's going to be important? Wait till this news on England and the Commonwealth comes up. There's great stuff coming. So the importance is that your president knows exactly where he's going with all this. He just wants to sort of manage the news cycle so it doesn't have like Mike is just explaining, a big impact on the day-to-day market fluctuation. Because that's something that is a major peg for him going into the election.
And with anybody, I mean, if your negotiation is got the capability to really move markets, that derails your overall strategy a bit, right?
Mm-hmm.
Yeah.
Especially politically, right, Mike?
Yeah.
I mean, politics is everything.
Right.
Yeah. From our text line, 478-8298, does Mr. McCormick agree with you that the stock market and 401ks are going to tank after April? I didn't say they were going to tank. I just said if there's going to be an adjustment, that's when it would be, more than likely. Because the political picture will be a lot clearer, and that's when people are going to start to worry about, or if the political thing isn't clear, as Shane alluded to, if we are headed for a broker convention, I think that's going to seriously make investors fearful as to what is going to come out of a broker convention.
We will find something to be worried about.
Anybody, yeah.
We will find something to be worried about. Without a doubt. Without a doubt. I have no idea when a pullback will happen. In terms of all I have is what everybody else has. We look at the past data, and the past data shows that if you don't have earnings growth, you can only be expensive for so long. Mm-hmm. And we have had great earnings growth this decade. Last year, we had spectacular earnings growth, and we had, in many cases, negative returns in the stock market. 2018, we had great earnings growth, good corporate profits, low borrowing rates, accommodative Fed, stock market, not good. 2019, boom, fantastic, right? I mean, 50% in the technology index. It won't go in a straight line. It's going to be scary, but there's no other things to do with your money right now. If you don't be a contrarian and bet against the market, but absolutely have some safe money available in your 401k. Don't monkey with it. If you want to, you can make it slightly more conservative. But here's the problem. Bonds are an issue that we could do a 2-hour show on right now.
Yeah.
Bonds are more overvalued than stocks in my mind. Mm-hmm. We talk about go to dividend stocks if you need income now. I would barbell it with dividend stocks and treasuries. I would certainly not go to high yield. And I just read a report that says that junk bonds are going to have a great year. And they're not paying you for the risk right now. We've talked about the oil industry being on delicate footing, basically because we've got so much. We've talked about how the Fed is not going to be able to reduce rates reliably going forward. I think that the data coming out from Finland right now that did the first negative interest rates, and Shane can talk about this, but negative interest rates have not worked. And the idea there is that the government says, we're going to charge people to park their money. Mm-hmm. We're going to go negative, where if you want to save money, we have a CD for you. You're going to pay me $1 for every $100 to keep your money safe.
Right.
Which I guess if you phrase it like that, there's some value to that.
That's safe.
What they've found is that these negative rates that these countries have played around with have encouraged people to be more fearful, not more aggressive. And so I would think it's, especially the way that the U.S. is positioned right now, we're not going into negative rate territory. We're going to hold firm, I believe, on interest rates. And that means bonds there's a really low ceiling out there for the bondholders. So that might be my big story if we have a major dislocation in the market, it's going to happen from fixed income. Fixed income dollars are much bigger. Of course, foreign currency dollars are much bigger too, but that's where the it happened because of this. And to think about it, that's what happened last time with the collateralized debt mortgage obligations. We're coming up with new flavors of that. I know plenty of people that are able to buy homes with very little money down. And so, yeah, we're there's a bubble underneath us. Right now, we don't see it looking like it's going to pop. That would be the forecast for me. Fixed income markets are the ones to watch out for.
Yeah. From our text line, 478-8298, microwaves, who cares, since AOC and her ilk say we've only got 10 years to live, 20 years tops. Daniel, you live in Montana, one of the last best places. Worrying about all these things won't add 1 cubit to your lifespan. You'll die from stress and anxiety before you do of any of these things you're so concerned about. So, I don't know.
Hey, we're glass half full show here.
That's it. We don't care. So we're set. We're set for there.
You're only stressed out about things you don't know.
Well, that's true.
You're only fearful of things you don't understand.
Yeah.
And so the reason that you have Mike and me talking to you, Mr. Mayor, is because we know and understand the market and the values that we're talking about.
That's right. That's why you're both here. Hush money from cell phone companies. This is why Alex Jones and conspiracy kooks are dangerous.
Well, he's talking about lobbyists.
Yeah.
I mean, that's what he was talking about.
Yeah. With Trump's trade war hurting farmers, should I sell my ag stocks or hold on for more farmer bailouts to help? Well,
great question.
The trade agreement should help some.
Well, the gist is it's not an investment thesis should not include a government bailout as a revenue making alternative. So no, if that's your hope, you should get it now. However, we will someday get to inflation, which will affect commodities. Mm-hmm. I don't know when.
Yeah,
we've been saying easy money should create inflation for a decade, and it hasn't. And we have this new of course, what happens now is the economists come up with new models where we don't have an inflationary scenario because we don't have population growth, because we don't have accelerated money velocity and international trade, and as Shane talks about, currencies. So I don't see it being now as the time to go into commodities. However, if your alternative is cash because you're too afraid, yes, there should be a bigger allocation to commodities. These alternative strategies that you hear marketed from my businesses, really commodities do the work in a much more simple way, typically, at least in my experience. Managed futures had its day. Long short has never had its day. Absolute return is the most ridiculous idea if I ever heard it. That's basically where a bunch of smart guys get to make fees for you holding your money at near zero level.
Right.
But commodities would be the alternative that makes sense. And so an ag stock that pays a dividend might be a nice place to be.
Well, and also, too, commodities are not the place for the inexperienced investor either, because that's
true. And so this texter was talking about owning a company that is based in agriculture, not owning the commodity directly.
Right.
And so, yes.
So the agriculture person, if China's not buying soybeans, you can go to corn, you can go to wheat, you can go to rice, you can go to other.
Yep. If you're in fertilizer, somebody's growing something somewhere.
I'm going to say, So, so there's something there somewhere. Inflation rate right now, 2.05.
Right.
So
these retirement models that we put together,
you
know, the big kicker on how much money you need to retire has to do with inflation. I mean, you have there's two questions. How much money will you save, and how much will it grow, and what's it going to cost? And that's inflation. And 3% was the rule of thumb that I was trained with. And you should look at the long-term return of a treasury, and it's pulling down from 3. But that's sort of where I got it from.
Yeah.
And now we're readjusting our models. And I'll tell you what, when economists readjust their models, that's time to be careful.
That's time to be careful.
Time to watch out.
All right,
thanks, Mike. Always a pleasure, buddy.
Thanks. It's a great start to the new year. It's going to be a good one. We're all living in the last best place.
You're in the house.
We got the soapbox.
Yep, we will. We'll keep tabs with Mike all year long, hopefully.
I hope so.
And we'll.
And thanks for all the great text questions. It's really a great community you guys have built here.
Yeah.
Everybody's valued, even DRP. We like you.
Yeah, there you go. All right. That's going to wrap it up for here. Shane and I'll be back with local and the 5 things you need to know, and your calls and texts and anything else that's on your mind here as we start 2020. Wow. My eighth decade.
Shazam. Chew on that.
I know. We'll be back. Stay tuned.